Dr. Janil, Senior Minister of State, Ministry of Communication and Information, and Ministry of Transport. Ladies and gentlemen, good morning. Thank you very much for this invitation to be here to speak. It's my pleasure to be in such a great company. Thank you, Minister, for your opening address, highlighting the remarkable journey of our Smart Nation effort. You did put some pressure on me in terms of, where are we going to get at least some of these resources. Now, GIC is in the business of investing, is in the business of supporting and investing in enterprises. So let me begin my address by briefly touching on GIC's history, as well as how we support these enterprises. GIC was set up in 1981 with a sole mission of generating value, of protecting our reserves. To do so, we built a diversified global portfolio, which is somewhat equity-centric. In other words, we rely on equities or business enterprises to help us to get the real return that we need, return over and above global inflation. And I'm glad to say that we have done so for the last 30 over years. Now, on technology investing, as Haslinda said, indeed, we started right from day one, because tech companies have always been around or have been around for a long time. So when we started in 1981, we started to invest in tech by investing in those listed on major stock markets. But very quickly, we expanded into venture space when we set up our San Francisco office in 1986, right? So that was some years ago. So the long history actually explains our strong relationship with a number, and in fact, many of these leading investment managers in the Valley as well as around the world. But it also explains, the constant effort for us to avoid being pro-cyclical, having seen the ups and downs of technology investing cycle, the boom and bust, especially during the dot-com era, right? Which seems to be distant memory, but in our mind is always fresh. Today, we are active in major hubs and asset classes because we are global, we are in multi-asset classes, and because we invest across region, public-private markets. Many of our partners, many of the new companies find that to be really quite attractive. We are flexible in terms of the development stage, so we invest from startup stage all the way to mature, big listed companies. We are flexible in terms of capital structure. We can invest in equity, preferred debt, in hybrid, in many different forms. Investment size. Some ticket sizes are small, some ticket sizes are really big. Geography, around the world, and of course, duration, right? Being a long-term investor, it affords us this ability to stay with our investee companies through their life cycles, including multiple rounds in some cases. As many of you here know that building a successful business requires sort of almost constant financing, right? So I think GIC, when we worked with many of these investee companies, we would stay with them throughout the life cycle. Let me now speak a little bit about how we see businesses evolve to point out what we consider the fundamental, right, of business enterprises. Now, business enterprises ultimately succeed or fail on whether they deliver customer value, right? So even as we are sort of very involved in these financing rounds and market valuations, it's important not to lose sight of that. Getting that right is fundamental. Good, cheap, and fast still matters. Perhaps even more so in this day and age. That intersection between the three, in fact, is the great formula for producing unicorns, right? Which I think some are already here. So that getting that formula right is so key. Customers have been the big winner of this tech era. Collectively, our needs or their needs are being met better, cheaper, and faster. The innovation have been nothing but short of transformational, including services in search, maps, social media, entertainment, e-commerce, sharing of assets, or the ride-hailing and delivery of foods, and in so many areas. All of a sudden, life is so much better for consumers. Now, in particular, many of the long unmet needs were met, and in fact met beyond expectations. One example, quite a remarkable one, is that in the micro business loan or credit area in developing countries, we have seen small businesses previously had no access to any credit, are now able to get small business loans, allowing them to expand their businesses, in fact, to lift many communities out of difficult economic situation. The same is for e-commerce, right? Making a lot of small traders, getting them the market to sell their goods and services. So normally in business, we talked about winners and losers, but actually in this case, technology has really done a great job that we are not really even seeing any losers, because in the first place, there weren't any incumbents, right? So that's a really good thing. Now, indeed, customers have also discovered new needs, right? Needs that we never knew we had. So who would have thought that we needed about 10,000 songs in our phone, right, to binge watch, a lot of these TV dramas, to have, fast internet connection 24/7, even on all our flights, to be able to do a video conference, in the cross-Atlantic flight. I mean, things like that, right? Perhaps we may even have this wish to be able to take a nap in a car that drives itself or flies itself even. So a lot of these needs are being discovered, right? Now, next is customization. So that's another big trend. That customization to individual preferences and you might say fancies, that's also happening. Advances in data science, UX, manufacturing technology, predictive modeling will bring us more tailor-made solutions. That's a big business opportunity. It will make switching costs for customers so much higher. The customer will still be kings and queens, but they will be captive. Now, with a lot of changes of technology, they are not all good and beneficial. I think Minister talked about some of the downside earlier this time round, the pervasiveness, speed of change, the concentration of power, and the degree of intimacy make the downside more severe. So from privacy issue, to cyber theft, to fake news, to addiction, the list goes on. So with more advancement, in fact, this might get worse. It might introduce new risks, which we do not know what there are yet. So we would also encourage all parties to work together to make sure that this opportunity does not turn, to become a disaster. So at GIC, while we support technology and technology investing enthusiastically, we do so with some circumspection, right? That generating long-term results require us to pay attention to sustainability issue. Like we don't want this to be just a short-term boom-bust type of situation, especially in those companies which we invest in. Now, I talked a little bit about GIC as well as how we view businesses. So let me now look at these issues more through an investor lens and highlight some of our observations. First, winner, of course, are those with relentless focus on customer value. What are the customers' pain points? How can new technologies be applied to address them? This is the perspective of the top technology leaders. For example, back in 2015, I spent about almost 3 hours with Lei Jun, the founder of Xiaomi, to really listen to him discussing primarily the customer pain points which he saw, right, in his market as well as in those areas that he was interested in. So focusing on that, creating that customer value, meeting those needs is what tech, big and top tech leaders do. Second, we are soon reaching a point where every company is a tech company. It's getting harder to differentiate. Rather than look at traditional labels, classification, we should look deeper into what are the actual tech capabilities which companies have. First principle perspective is very important here, including examining, of course, the business model. Cash flows. Cash flows are very important, right? We support companies which, of course, start with negative cash flows and then still negative cash flows and more negative cash flows. But ultimately, we like that to be big positive cash flows. And of course, balance sheet strength, competitive position, things like that. And in fact, in here, we have found some traditional companies which have very substantial technology capabilities, but sometimes in the markets, trading at what is called old economy valuation. They are good companies. They are good investment. So our teams work really hard at finding or trying to find more of them. Third, competition comes from everywhere. So when we looked at our investees or potential companies to invest in, we look not just, of course, in their area, but to make sure that they do not ignore small competitors nibbling at their heel. Because giving an inch would mean giving, a mile. So fat margins attract lots of competition, right? That's almost like the Amazon's business model. Go to where the margins are fat. So true business modes are getting fewer, rarer. So today, many of these modes, of course there are, but they are found in what is called ecosystem businesses, where cross-selling, rich data, high customer switching cost, and scale are reinforcing one another. So they create a powerful network effect. And this is important for investor, because this network effect means it could produce very high and sustainable return, because investors or companies themselves do not need to put in additional capital to attract more customers, right? The network itself attracts more customers. So it's a bit like an investor surplus that we look for. Now, of course, with great power comes great scrutiny. Management of these companies, these ecosystems in particular, need to manage the societal sensitivities, right? So to be able to operate well, you need that license as well. So those who can do so, big ecosystem businesses, and those who can do so well should form the core of our investment portfolios. Fourth, emerging markets, which are currently going through a bit of a turmoil, at least where financial markets are concerned. But tech disruptions can be more powerful actually in developing or emerging market countries, because there are more unmet needs, there are more undiscovered needs. In fact, the populations tend to be younger, and they take to technology in some way faster and better. So a well-funded disruptor has many leapfrogging opportunities. So that's a big source of good investment. Fifth, some of the best investment in the tech space are not in the first movers, but the fast followers. We have seen many examples of this. In fact, FANG or BAT themselves are examples, right? So often it's not the tech invention, but the right commercialization angle and of course the execution of that technology capability. So fast followers are as good, if not better, in some cases. Finally, some of these sudden successes that we see are actually efforts of serial entrepreneurs. So serial entrepreneurs are a very good group of company founders. Because from investor point of view, it lowers the risks because the founder usually would have some capital or some of his own capital invested and are usually not in a rush to monetize. And that helps. That alignment, more financial backing, because if they have built successful companies before, they would have a track record that continues to enjoy backing from other financiers. And they usually also have a network to allow them to leverage on some big platforms, lowering the risk of the business. So serial entrepreneurs, very, very powerful, right? That's why actually in a lot of this innovation capital, you see that if you are the first-time entrepreneur, actually a lot of investors will look at you somewhat warily, right? Because they don't want to be the one paying the tuition fee, you know. So it becomes a bragging right, right, for people to say that I've started 5 companies and they have all failed. So it has some value in it, although of course you have to kind of look at it case by case as well. So ladies and gentlemen, GIC has quite a long history of investing in technology. We have seen the ups and downs. We have learned from our mistakes, right, in some cases, but we continue to improve. Through it all, we have developed new skills, strong relationship with investors, fellow investors, as well as companies. A relentless focus on delivering better customer value is the hallmark of every successful tech company. As investors, we look for commercialization of tech that best solve pain points of customers, whether they exist in old or new economy. So we are not just looking at this shiny, new sector of technology. We look for ecosystem companies that are aligned with societal interests. This is especially so in emerging markets where unmet and undiscovered needs are greater, where leapfrogging opportunities are plenty. I look forward to the discussion with Haslinda later and wish you all a very fruitful day. Thank you.
Now, interesting, Kiat, you said that, which is the truth, that every company thinks is a tech company. There's tech in everything and everyone's talking about it.
That's because the valuations are higher.
We'll talk about valuations slightly later, but how do you define tech in the context of your investments?
Well, tech, as I said, is difficult to get down to specific qualification. It used to be that when we talk about tech, it was information tech. S&P has certain classification, which they are changing, by the way, because they also have to respond to how businesses are changing. So these days, when we look at tech, we really looked at more the ecosystem type of situation, or companies which have specific proprietary technologies, which allow them to carve out a certain niche, usually enjoy a high fat margin, at least for a while.
Did you have to change the culture in GIC when you started investing in tech? I mean, you started way before everybody else. What did that entail?
Yeah, tech, the challenge when people talk about tech, especially the sort of earlier stage type of companies, is that, as I said, the cash flows are not there, right? The track record is somewhat short, and in fact, the cash flows are negative. So it requires one to really understand a few things. One is that's the space where the so-called addressable market is going to produce significant cash flows. It requires one to make, as best we can, the quality of the entrepreneurs. That's very, very important, right? Who is the one driving that? It requires us to have this long-term mindset that we are not going to be seeing a lot of very good outcome for a while, that in fact we will be required to sort of support that company over many rounds. So I think these are the kind of adjustment that we have to make versus you might say, the bulk of actually what our investment are in, which are large listed companies where they already have long-term track record. You can do a lot of modeling. You can test a lot of data. So that little, sort of difference, I think requires us to make almost a sort of mental adjustment.
You touched on valuation slightly earlier. I mean, everyone's invested. We have the sovereign wealth funds, we have the hedge funds, of course, driving the valuations of these companies. And some of them, like you said, unprofitable. I mean, what do you make of the valuations that we're seeing right now?
Yeah, I think we talked about that, some time back. We have some concern with the kind of valuation increase that we have seen. But we still, having said that, we still are able to find some really good businesses, really good entrepreneurs in spaces or in areas where there are still significant opportunities. So one, I guess, with so much money in this market, we just have to be a lot more careful and selective.
Where are you finding these opportunities?
Well,
You've mentioned China and India before.
I mentioned emerging markets. I think that's still a really good area to look for. Some really great entrepreneurs. I think you have some of them on the list of speakers. So I would look very carefully at their work.
I'm curious. I mean, we have a lot of innovators here, and they're looking for funds. What specifically? How do they win your money? What do you look for?
I think I gave some pointers, right?
But
Customer value.
What's crucial?
Sorry?
What's crucial? How long are you prepared to go without profit for the company, for instance?
I think we have had experience with quite a few of our investment where it went on for a while and eventually turned out to be great success, right?
Did you have second thoughts in the process?
We always have to re-examine the case, re-underwrite the case. And in fact, I think for quite a number of these cases, they have to pivot their business model along the way as well. That is why it's very key to have the right entrepreneurs behind this, right? So knowing the initial business model is not good enough. Knowing that initial, TAM, right? The TAM is not good enough. You have to really work with the entrepreneur, understand how he or she is thinking, what's the team like, what's the culture like, to have that confidence. And it's important to also point out that you cannot expect 100% hit rate, right? That's just not, at least we can't do it, right, in investing. So I think we also accept a certain percentage or level of not getting it right. But thankfully, I think in the main, we have been able to find many of these great companies.
Of course, you're a long-time investor in tech. Share with us what you deem as your biggest success in tech and perhaps your failure in tech.
Well,
GIC doesn't really reveal the companies that it's invested in, so it'll be quite interesting for us to know what you deem as the biggest success.
Yes, I really would not get into the specific names because I might get a lot of phone calls after this. But generally, I would say, especially in this region, in Asia, I think we have had a number of good successes. The difficulties was more in the dot-com era. Of course, small investment, but during that whole dot-com era in the Silicon Valley venture space, I think we had some difficulties, let me put it, right, that we learned from, not be short-term, right, in some of these investing.
The debate right now is Silicon Valley versus China, where the next big thing in tech would come from. What are your thoughts from being invested in both? I mean, you're committed to Silicon Valley. You've invested a lot in Chinese companies as well.
Yes. So both are major innovation hubs. Both are major, places where you see new entrepreneurs, new business models, new companies coming through. From our point of view, we want to make sure that we are present in both places. There are some differences, although I would first say that there are more similarities than differences. One difference is that we notice China, now has a bit of a manufacturing kind of almost an edge that there, places like Shenzhen, for example, produces companies which really are powered by their manufacturing technologies. Whereas in Silicon Valley, it's still more software type of effort, so they have their niches. The other difference, of course, is that at least so far, the Silicon Valley companies are more international, right? It might have to do with just the historical linkages with other markets, might have to do with the language, but we are sort of waiting to see how Chinese companies are also expanding overseas. But for now, I think there is that difference.
So is the rise of Chinese technology threatening Silicon Valley?
Well, there has always been healthy competition across the world. It's not just between these two hubs. It's also Israel, it's London, it's Berlin, so many different places. That competition will never go away. It's never, been absent. So we expect that to continue. So as investors, we have the benefit of being able to sometimes invest in both parts of it, and sometimes seeing that actually the pie is growing. It's not necessarily a zero-sum game. Actually, in areas, as I mentioned, in the so-called unmet needs, that's a whole new value creation that there is actually no loser, right? So I think in fact, technology allows more of that kind of situation where new needs or unmet needs are being met.
If I could get your thoughts on the tech space in Southeast Asia, we've seen a lot of unicorns emerging. Yeah. Where do you see that in this whole process of developing smart technologies and towards smart
we
cities?
are very positive on the outlook for this region in terms of the tech ecosystem and how companies are coming through. Firstly, it's a big region, right? 650 million. A lot of unmet needs, and especially with Singapore right in the center of it, I think there is great sort of new technologies coming through to the region. Of course, when investors come here and looked at the markets, typically we looked at the biggest markets, meaning the biggest population. So Indonesia is a big market. We are seeing, we have been there for some time, but we're seeing more players coming in, which we are happy about because it makes the whole ecosystem a lot more vibrant. Lots of Chinese tech companies are already in Indonesia. The Americans are also there. We are seeing Europeans showing up too. So again, I think we are seeing very quickly, right, that this region coming through, in some areas even leapfrogging. Some of the areas are, you might say, just the same kind of template, right, that we have seen in India or in China being applied to this region. But there are also new business models being created, which I think eventually, in fact, will get sort of re-exported back to some of those other original capital sources.
You touched on ecosystems. Are you encouraged by the ecosystems that you're seeing?
Mm-hmm. Well, there are, the ecosystems are formed because there are some natural synergies, right? That if you spend a lot of your time on certain app, lots of things can be introduced there. You go on and you're familiar, you already have an account, lots of payment systems already set up. So I think we are encouraged that actually fundamentally creates customer value. So beyond sort of just the business angle, we see that as a healthy development. But as I said, as these ecosystems are big, pervasive, and very intimate, they need to be very sensitive about how governments, how the societies at large, looked at them, right? They have to be very responsible, making very sustainable type of decisions. So as we work with some of these companies, that's what, we have been encouraging them to do, be proactive about that. So as long as they can do that, actually, our view is that there will be more of these kind of companies down the road.
Chow, Kiat, we have about 6 minutes left. I want to take an overview of the markets. GIC being GIC, everybody's interested in its market view, and we're seeing perhaps an unraveling of emerging markets, likely to get into bear market as soon as today. Your thoughts on what's happening in emerging markets?
Yeah, this bear market measure, right, 20%, yesterday was 19%, so today it becomes a bear market. So, I mean, we talked about actually the lack of volatility for quite some time now, and now we are seeing it, right? I mean, we saw the bout of that actually sometime in February in the US. Now we're seeing, I guess, a bigger bout of it. I guess as a long-term investor, we are not too perturbed by it, right? In some way, at least in some markets, it gives us some opportunities as well. There have been some companies or stocks that or even bonds that we like to buy, but the kind of valuations were a bit stretched, but perhaps now is a better time. There are some countries which are experiencing difficulties. Most of the factors, I would say, are fairly idiosyncratic. That is sort of their own difficulties rather than systemic level problem. But in an era or in a time when the Fed is hiking, that we've seen that movie before, right? That money tends to flow back to the US because interest rates are higher, and then over time the value will emerge and then money will come back. So as a longer-term investor, we in fact like to look at that as a possible window of opportunity.
Do you think the Fed can be held partially responsible for what we're seeing in emerging markets?
Well, the Fed, has a difficult job. It has to make sure that it, manages the U.S. economy as well as it could. So hiking interest rate, after 10 years of extraordinary low interest rate policy is very reasonable. And Chairman Powell has talked about this at length, that the policy that from where we can see is very appropriate. So I think it's up to everybody to manage their own affair, right, in view of these change that we're seeing from the Fed, perhaps from other monetary authority as well. I think in those countries where there is high dependency on foreign capital, the care needs to be particularly high, right? Because this kind of international capital flow is big, right? I mean, again, it's not new. We have seen this movie before, right? Large amount of capital moving in and out of country. So the country's monetary authority, fiscal authorities, economic management team need to stay on top of that. We had a bit of a dry run, right, in 2013 when we had this thing called taper tantrum, right? So the Fed already 5 years ago sort of put a bit of that test on the market. I remember, we talked to quite a number of the countries and urged them, right, to make sure that the policies, the fundamentals are solid. And actually many of them, subsequent to that 2013 kind of wobble, have in fact taken very tough but very good measures to put the house in order, to cut down on the credit expansion. For example, there was excessive credit expansion in quite a number of Asian countries, for example. So they have already done a lot of those corrective measures. So we see this again very much as a shorter term market concern, some contagion. Investors or funds have to adjust the position. But quite a number of these countries are really in very good position. And as long-term investor, actually, we are looking closely at them.
There's a lot of talk about a possible recession, and I'd like to do a polling question here. When do you see a recession, a global recession, whether it's next year, in 3 to 5 years? And third is, what recession? When do you see a recession? Wow, wow. Still moving. %33 next year, 44 in 3 to 5 years. Some say we're in a good position. What's your take on it?
Well, we don't do this prediction really. I mean, we factor that in.
Look into the crystal ball.
No,
do you see a recession coming?
Actually, the more important thing I would say is really to look first at the valuation. What are the valuation assuming, right, or factoring or discounted? Actually, valuations today, at least in developed market, stock markets, for example, are clearly not discounting those kind of scenarios, right? So for those of you, right, who worry about recession in the short term, you should be worried about valuations at this level, right? And we do have some worry about that because the valuations are factoring, I would say, fairly, good economic trajectory. So just in terms of risk-reward thinking for investor, that's not a great situation to be in.
Okay. On that note, ladies and gentlemen, please join me in thanking Chow Kiat, CEO of GIC.
Thank you.
Thank you.
Thank you very much.